Good evening, everybody, especially to our esteemed lecturer, Prof. Dr. Abu. Today, we would like to present our group project for MBA 6073 Financial and Risk Management. I will begin with a brief introduction of the group members, which consists of five members. Myself, Wan Habib Ali, Jong Fong Sui, Ismail bin Muhammad, Ariana binti Ghani, and also Ikhwanuddin bin Yusuf. Our project company comparison covers the oil plantation industry, which consists of the Sarawak Oil Palm Berhad and also the United Plantation Group. Sarawak Oil Plantation Berhad was established in 1968 in Sarawak and operates 42 estates with seven palm oil mills and a large complex for its downstream refinery. It has 122,000 hectares of plantation land, and its current financial is with total assets of 5.21 billion and 845 million total liabilities. Its shareholders' equity amounting to 3.51 billion and revenue generated at 5.12 billion with a profit before tax at 420 million. Sarawak Oil Palm Berhad is quite a significant player in the Malaysian palm oil industry with a strong focus on sustainability and operational excellence, recognized by to its strategic leadership, enabling steady and expansion into global markets. United Plantation, founded in 1906, has 100 years experience in the industry. It manages about 51,000 hectares of cultivated land, with 80% located in Malaysia and 20% in Indonesia. Its key financials for 2023 refers to its total assets of 6.1 billion, its total liabilities at 567 million, with shareholders' equity at 2.877 billion. Its annual turnover is at 1.17 billion, with profit after tax at 284 million. It has the first in the world to receive the Roundtable on Sustainable Palm Oil certification in 2008 and is quite known for advanced research into development of plant breeding and tissue culture. Its market position is quite highly regarded as it has a strong governance practice, financial stability, and environmental stewardship, focusing on producing high quality specialty oil fats and strengthening its competitive advantage.
Thank you, Mr. Wan Habit. First, I would like to introduce myself. My name is Jong Feng Sui. My ID number 2402030406. Now I will covering on the corporate governance analysis and shareholder analysis. For both Sarawak Oil Palm Berhad and United Plantation Berhad, they are compliant to the Malaysia corporate governance principle to ensure transparency and accountability and strong leadership for the shareholder protection. For the SOP, Sarawak Oil Palm Plantation, the board composition consists of 9 members, 4 women. The board diversity all is Malaysian. Director, the top management are separated. The chairman is Mr. Ling Lu Guang and the CEO are Mr. Wong Hee Guang. They have a 5 committee in the board. They are the Group Audit and Risk Management Committee, Investment Committee, Nomination Committee, and the ESOS Committee. Sarawak Oil Palm Plantation also actively in the biodiversity and ESG reporting. That is their CSR and sustainability focus. For the United Plantation Oil Palm, they have 9 members also. The board composition is a 9 member. Only have one woman in their board member. So they are the board have been better diversified. They have a Danish and Malaysian director. So the top management position for the United Plantation Berhad, the chairman is Datuk Muhammad Nasir, and the CEO is Datuk Kraft B. Nelson. The board also consists of the 5 committee. There is an audit committee, risk committee, remuneration committee, executive committee, and nomination committee. United Plantation is a global lead RPSO pioneer for this industry. In the key highlight of the governance practice, the board diversify of composition, separation of the top management and the board role. Both company comply to the principle of separation of the group executive chairman and the CEO, which strengthening check and balance. The important is the separation ensure no single individual has absolute control over the decision making, promoting the transparency and accountability. They are also actively in the corporate social responsibility and sustainability. They all know that the sustainability is important for the oil palm plantation industry, especially on the ESG. On the shareholder analysis, for the shareholder breakdown for Sarawak Oil Palm Plantation, the major shareholder is a LCDA holding a state-linked entity is the largest shareholder with 19.47 ownership. High proportional of individual investor 26.64 indicated retail interest in the company. The director hold a minimum shareholder at 0.55% effective limited insider ownership. For United Plantation Berhad, the maximum shareholder, the bigger shareholder is Maximum Vista Sdn Berhad, hold dominant stake of 43.69%. In the strong control of the single shareholder, the institution investor account of 24.37%, showing trust from the largest financial player. The high proportional individual shareholder is 30.06 compared to the SOP. Now, I pass the risk and return analysis and capital structure to my colleague Ismail. Ismail, please.
Thank you, Mr. Jong Feng Sui. Assalamualaikum and salam sejahtera to our beloved Professor, Professor Abu, and my fellow group members. My name is Ismail, and today I will be presenting a comprehensive financial analysis for two major players in the Malaysian palm oil industry, which are Sarawak Oil Palm Berhad and United Plantation Berhad. This analysis covers their performance and financial strategies for 2022 and 2023, focusing on risk and returns, capital structure, and financial strategies. Okay, for risk and returns, let's begin by examining the risk and return policies for both companies. In 2023, Sarawak Palm reported a return of equity of 8.83%, while UPB, United Plantation, demonstrated a higher ROE of 18.43%. This indicates that UPB has been more efficient in generating profits from shareholders' equity. When we look at their financial ratios, SOP maintained a debt to equity ratio of 0.23, a current ratio of 2.7, and a PE ratio of 7.66. In contrast, UPB showed a more conservative financial structure with debt to equity ratio of 0.14, an impressive current ratio of 6.64, and price to sales ratio of 6.13. These figures suggest that UPB has a stronger liquidity position and lower financial leverage compared to SOPB. And for examining their stock performance, we see interesting trends. SOP experienced significant volatility with a negative 32.1% return in 2023, followed by a strong recovery of 30.4% in 2023. UPB, on the other hand, demonstrated more consistent positive returns with 8.2% in 2022 and 16.3% in 2023. This pattern indicates that while SOP, Sarah Oil Palm, may offer higher potential returns, it also comes with greater risk and volatility. As for capital structure, moving on to capital structure, both companies maintain strong equity positions. As of 2023, Sarah Oil Palm reported total assets of 5,203.24 million with total liabilities of 1,541 million and shareholders' equity of 3,672.21 million. United Plantation, meanwhile, had total assets of 6,100.07 million, total liabilities of 567.56 million, and shareholders' equity of 2,867.42 million. It's noteworthy that both companies have relatively low leverage compared to industry standards. Sura Oil Palm debt to equity ratio of 0.23 in 2023 indicates that for every ringgit of equity, the company has 0.23 of debt. UPB even lower ratio of 0.14 suggests that extremely conservative financial approach. As of cost of capital and optimal structure, when we consider the cost of capital, Sarah Oil Palm reported a weighted average of cost of capital (WACC) in of 7.2% in 2023, while United Plantation WACC was higher at 10.38%. This difference is significant as it suggests that Sarah Oil Palm has a more optimal capital structure, potentially benefiting from the tax advantage of that while maintaining a strong balance sheet. The stock prices as of December 31st of 2023 were 3.3 ringgit and 30 cent for Sarah Oil Palm and 17 ringgit and 80 cent for UPB. These prices, combined with their respective PE ratios, indicate that the market places a higher value of UPB earnings, possibly due to its higher ROE and more conservative capital structure. Uh, as for financing strategies, both companies has adopted conservative financing strategies, but with some notable differences. SOP has slightly increased its leverage with bank borrowings of 21 million in 2023, down from 248 million in 2022. This significant reduction in borrowings suggests a strategic effort to deleverage and reduce financial liabilities. United Plantation, on the other hand, maintains minimal borrowings, reflecting its ultra-conservative approach for financing. This strategy provides UPB with the substantial financial flexibility but may limit its ability to leverage growth opportunities. Our recommendation for SOP, I recommend maintaining the current debt to equity ratio while considering slight increase in debt for attractive investments. The company should also monitor interest rates for potential financing opportunities. Given its lower WACC, Sarawak Oil Palm is well positioned to optimize its capital structure further. For United Plantation, we suggest considering the introduction of small amount of debt to potentially enhance returns. The company could evaluate debt-funded investment opportunities and implement a dividend reinvestment plan to provide additional capital while giving shareholders the option to increase their stake. Both companies should continue to assess their capital structure in the context of industry trends and growth opportunities. They should also explore alternative financing methods such as joint ventures or strategic partnership for large-scale projects or expansion into new markets. We can conclude that Both SOP and UPB demonstrate strong financial position with conservative capital structures. Sarawak Oil Palm show potential for optimizing its capital structure, while UPB might benefit from a slightly less conservative approach. Both companies are well positioned to navigate the cyclical nature of palm industry while pursuing sustainable growth. The key to success for both entities will be maintaining their financial stability while adapting to market conditions and seizing growth opportunities. By carefully balancing the use of internal financing, debt, and equity, these companies can enhance shareholder value while managing the risks inherent in the volatile palm oil industry. Okay, thank you for your attention. Now, I will pass to Ms. Arena for the next slide. Thank you.
Now, let's dive into dividend policy adopted by each company. This is a critical area because it reflects on how the company reward their shareholder while balancing their financial and operational priorities. First, we are going to talk about dividend policy adopted by each company. For Sarawak or Berhad, there follows a conservative dividend policy, which means their focus is on retaining earnings to reinvest in the business for expansion and to secure long-term returns for shareholders. Their strategy prioritizes growth over immediate payouts, which ensuring sustaining progress. For United Plantation Berhad, they adopt more shareholder-friendly policy, which offering payout a higher payout ratio with stable and conservative dividends. Their objective is to deliver reliable and attractive returns, making them a preferred choice for income-focused investor. Next, we are going to talk about form of cash distribution. Both companies primarily reward their shareholder through cash dividend. However, there are some difference in their approach. Sarawak Opam Berhad occasionally declares a special dividend, particularly during strong financial years, which showcasing their flexibility. UPB, on the other hand, consistently both pays both interim and final dividends, reinforcing their image of financial stability and reliability. Next is theoretical justification for dividend payouts. To understand the rationale behind their dividend policy, we need to look at some theoretical frameworks. First is the dividend irrelevance theory, which according to Miller and Modigliani, dividends do not affect shareholder values in the perfect market. However, in the real world, imperfections like taxes, transaction costs make dividend attractive to investors. But in hand theory, suggests that investors value the certainties of a dividends over potential capital gains, especially in volatile industry like palm oil. Next theory is signaling theory, where it's stated that regular dividends signal financial strength and stability to the market, which build investor confidence. And next is agency cost theory, where dividends help minimize excess cash, ensuring funds are used efficiently. This approach is particularly relevant for SPOB, which focus on reinvestment. Next, we are going to talk about challenges and key consideration of dividend policy. Despite their differences, both companies face several challenges when it comes to dividend policy. One is the market volatility, where cyclical nature of palm oil prices can impact the ability to sustain dividends during downturn. Return earning versus payout. SPOB needs to balance between distributing dividends and funding growth opportunity. United Plantation Berhad need higher payout ratio could limit funds for R&D or acquisition in the future. Tax implication also affects the are one of the challenges where dividend policies may result in varied tax treatment for the shareholders. ECG trends, where both companies need to align their dividends with sustainability initiative to attract ESG focused investor. Next, the challenges exchange rate risk for international shareholder. Currency fluctuation could affect the perceived value of dividend. To summarize, the dividend policy of SPOB and UPB reflect their unique strategies. SPOB focusing on reinvestment and long-term growth, making the approach more conservative. UPB prioritize stable and attractive returns, appealing to investors seeking consistent income. These policies are shaped not only by the financial goals but also by external factors like market condition and shareholder expectation. So this concludes our discussion on dividend policy. Next, let's look at the valuation metrics for this company to further understand their financial standing. Thank you.
Okay, next part for the presentation is for the valuation. So in terms of PE ratio, SOPB have a lower ratio which is 7.34 that indicates undervaluation, while UPB have a higher ratio 17.95. So that reflects strong market confidence. So in terms of PB ratio, SOPB is undervalued with a PB equivalent to 0.8, whereas UPB trades at a premium of PB equivalent to 3.47. So in dividend yield base, SOPB offer a slightly higher yield, 4.91% compared to UPB at 4.09%, appeal to income focused investor. So from the data, we can analyze and we can have a few key insights. So in terms of SOPB, undervalued for PE and PB ratio, and then they have a higher dividend yield, suggesting that SOPB is returning more cash to investor relative to its price. And it is attractive for value investors to seek growth opportunity at a lower valuation. And in terms of UPB, higher PE and PB ratio indicate strong market confidence and premium valuation. So it has a stable dividend payout reinforced UPB position as a low risk income generating investment. So it is ideal for conservative investors looking for stability and consistent return. So what we can recommend to SOPB and United Plantation Berhad. So in terms of SOPB, we can suggest for the growth focused strategy, which we can leverage the low cost debt to fund expansion and modernization. We can improve the ROE through better cost management and value added product. And then we can stabilize dividend payout to attract a long term investor. We can use a hedging strategies to manage palm oil price volatility, and we can expand sustainability program and achieve a higher global certification, for example, like RSPO. And in terms of United Plantation Berhad, uh, we focus on stability strategy. So slightly, we increase the leverage to fund growth without compromising stability, and we invest in R&D for renewable energy and high yield palm varieties. And then we broaden product portfolio into specialty oils and bio-based product. Uh, then we expand global presence in high demand market, example India and China. And lastly, we can increase the dividend payout or offer a special dividend during a strong financial year.
Based on the comparison for these two companies, it is recommended that Sarawak Oil Palms Berhad focuses more into its growth strategy. Among other things, to leverage low-cost debt to fund expansion and modernization of the industry, improve return on equity through better cost management and value-added products, stabilize dividend payouts to attract more and long-term investors, use hedging strategies to manage palm oil prices, and expand sustainability programs and achieve higher global certification. Whereas for United Plantation Berhad, it should focus more on to stability strategy, where it slightly increases leverage to fund growth without compromising its stability. Invest in research and development for renewable energy and high yield palm varieties. Broaden products portfolio into specialty oils and bio-based products. Expand globally its presence in high demand markets such as in India and China, and increases dividend payouts to offer special dividends during strong financial year. In conclusion, Sarawak Oil Palm Berhad demonstrates strong growth potential with undervalued financial metrics, but faces moderate volatility and challenges in maintaining profitability. Its strategy outlook focuses on expansion and operations improvement, making it an ideal investor seeking growth despite moderate risk. As for United Plantation Berhad, it's exhibits stability in the market confidence with premium valuation and consistent return, but a conservative approach may limit growth opportunities. Its strategic outlook would maintain its position as a low-risk, sustainable, and income-generating investment, appealing to conservative investor. And its recommendation is our recommendation would be United Plantation Berhad is far better for safety and long-term income generation. But in general, Sarawak Oil Palm Berhad and United Plantation Berhad represent distinct yet complementary strategies in the palm oil sector, offering opportunities for diverse investors' preference. Their adherence to sustainability and corporate governance ensures resilience in a competitive and dynamic industry. With that, we conclude and we thank you, sir, for your attention. And we hope that our presentation has touched in some of the most key elements that is required for this subject. Thank you very much and Happy New Year.